Hello, my name is Vasu. In this video, I'm going to describe how to use my mobile self-service trading help desk called GeoRolodex. When you launch the application, you get this opening screen with 4 tabs at the bottom, namely Stocks, Options, Messages, and Trades. Coming back to the Stocks tab, you can see that I already have a few stocks on my watch list. Adding stocks to the watch list is pretty simple. You can either browse for the stock alphabetically using the exchange or use the search box on the top, expand the stock, and hit the follow button. Today, I'm going to describe a trading scenario for the company Micron Technology with the symbol MU. When you expand the row, you can see some high-level information about the stock. One relevant piece of information I would like to draw your attention to is their fiscal year, which is from September to August. That means they would have just finished up Q1 and results should be coming out shortly. Let us see when that is. I use the dashboard button to get to the full view of the stock, where I can see that there are 3 days left before the results. The results are out next Tuesday, which is December 19th. Typically, there is a lot of activity following an earnings call and therefore a great opportunity to make some money out of the movement. From the chart below, you can see for yourself that how the story played out in the last quarter. This is an interactive chart, and with time on the x-axis and share price on the y-axis, the blue line is the stock price and the green bars are the trading volume for each day. From the chart, we can see that it started around 42, touched almost 50, and then settled back down at just a tad higher. The secret sauce to being able to make some money in trading is to catch the movement on the upside, hold it, and then get out at the right time. Stock options provide a simple and cost-effective way to do that. The rest of the video describes how to go about selecting an option trade in a systematic manner using my application. Specifically, there are 4 important questions that will need to be answered: what to trade, when to do it, how much, and for how long. The when question is easily answered from my application. By putting this stock on a watch list, I get notified when it is the right time. As you can see in my messages tab, I got a message this morning with an earnings alert for Micron Technology. This gives me a couple of days to do some research and pick a strategy before Tuesday. I generally use the stocks application that comes packaged with the iPhone. I find the ticker symbol, and at the bottom of the screen on the stocks application, the rightmost tab, there are all the news articles relevant to the stock. That is usually sufficient for me to know how the experts and professionals feel about the company's upcoming report card. In this case, the outlook is positive and they expect the stock is going to go up in price. I also get a little confirmation for my conclusion about upward movement. As we can see in the screen, the 12-month price target for MU is 53.86 based on consensus opinion of all the analysts. We got one question answered, which is trade Micron sometime before next Tuesday, and now 3 more to go. For the next 2, we are going to tap on this experiment button and go to the option strategy selection screen. There are over 2 dozen strategies to choose from for various scenarios ranging in risk and complexity. I'm going to describe one simple strategy today. First, I'm going to use the conclusion from my research, which says that the stock is going to go upwards. This option is already selected for me here at the top. Next, I'm going to select my existing position for this stock. I'm coming as an outsider and having no stake in this company, either in terms of long or short positions. So I'm going to pick none on the left side. Now on the right side, I get various possible trading strategies to make money from the upside. I'm going to pick the specific strategy and I'm going to walk you through this strategy called bull call spread. The bottom of the screen has answer to my second question. The what? It says buy an April 42 call and sell an April 46 call. For buying the call, I would have to shell out $560. But I also get $375 back from selling the 46 call. So the net debit from my account for this is only $185. I put $185 of my money on the table, trying to get some money back. And from the chart, we can see that it could be anywhere up to and limited to $215. So the downside of this strategy is my reward is also capped. As you can see from the chart, no matter how high the stock goes, the maximum reward I'm going to get back from this strategy is $215. So I risk less money initially, but also settle for a smaller reward. There are ways to get around that, which I will explain in a minute. But first, let us look at the chart in front of us. This chart has the share price on the x-axis and expected return on the y-axis. The green zone is what the simulations that I run behind the scenes predict where this stock is going to be in the next 90 days. We can also see that the blue line, which is my expected payout, flattens at the top and at the bottom. So no matter how high the stock traverses in Q2, I'm only concerned about a small window of this stock in the stock price swing. My simulation even tells me the probability percentile. There is 95% probability that this stock is going to be trading somewhere between 42 and 50 in the next 90 days. So I got the what question answered. What to trade? Buy a 42 strike price call and sell a 46 strike price call, both with April expiration date. Now to the how much question. The risk reward profile is for one contract for each option. However, if you are willing to risk more of your working capital, you can execute the same trade with 2 contracts each and double the reward, or maybe 5 contracts, 10 or 50. This is completely dependent on your appetite for risk and affordability. So for the how question, it could be 1 or more. How many? And at this point, we have 3 questions answered. You can now get to your brokerage account with, say, Fidelity or 3D Ameritrade and place the trade. Now for the last question, how long? We saw earlier that the stock price point our reward peaks at this trade is at 46. So no matter how the stock moves, just watch for when it hits 46. Close your position, collect your reward and move on to the next trade. One last problem to solve is knowing when that moment happens. As we saw, the stock price is not going to be nice and linear, steadily going up steadily every day. It is completely at the mercy of the market forces. To help with this, I have the same watch list feature for options. So once I place the trade, I come to the options tab, and then from the expand the MU trade, and then I go to the $125 expiration, 125 day expiration to get the April options list. Scroll down to strike price 42 and then hit the buy button and scroll further down and then go to 46 strike price and tap the sell button. So I will be notified when the Micron stock touches 46, which could be next week, it could be next month, or any time between now and April when the options expired. I do not have to keep watching the stock. My app will do it for me and let me know. That's it. Hope you like my creation. In the next video, I shall describe a different strategy for a different type of simulation. For example, what to do if you think the stock is going to go downwards, or maybe it's just going to go sideways. It's neither going to go up or down. It's going to stay at a steady price. Or maybe it's just going to make a surprise move. You know it's going to move. There is some surprise news, but you're not sure whether it's good or bad. There are multiple option trading strategies for each of those cases. You can come experiment, pick a green zone, find your comfort trade, and execute it in the same manner. Talk to you next time. Thanks for watching.